Exactly how to trade the market open. In this video, I'm going to explain exactly how I trade the market open almost every single day, how you can do it so that you can make trades exactly like this. From this one trade, I made $8,404, and it wasn't even a massive trade. I make trades bigger than this. But if I can make a trade that's like half decent and still make 8K, then you can definitely do it too. And again, I'm not like a special person, I'm not like a genius, like I'm just a normal dude. So you can definitely do the same thing if you know what to do. In this video, I'll explain this trade, I'll explain how I found it, why I entered it, everything. Let's get into it. So the first thing we need to talk about, right, is why even trade the market open? Because people are confused. People kind of say, okay, why am I trading 9:30 a.m.? Why not trade 12 p.m.? Why not trade 2 p.m.? Why not trade pre-market, right? There's a couple of reasons. The first thing that's very important is volatility. The second market opens, there's a crazy amount of volatility because everybody is trading it. Let's say 25% of the people that trade, they trade pre-market. But normal market hours when market opens, it's like 100% of people. Everybody is trading it. So there's going to be a lot of volatility, meaning the price is going to go up and down really quickly. But if it goes up really quickly and you get in and out really quickly, you can make some money. Like 5, 10, 15 minutes, boom, you're done. That's the first reason. Second reason is you get a lot of volume. If you look at the volume compared to pre-market, like look at the pre-market volume, you can barely see it. Look at the opening volume, it's crazy. So because there's a lot of volume, the price can go up and down really quickly. And the added benefit of having a lot of volume is this over here, it's liquidity. When you start scaling your account, you might have a small account, you might have like a couple of $100, whatever. When you start scaling your account and you start getting to thousands and thousands of dollars, liquidity will be such a big factor. And the market open provides liquidity by default because there's a lot of volume, everybody's trading it. So by default, you get liquidity. You can get into a position like in a second, and you can get out of a position in a second. That's the main reason you should trade the market open, is because it's extremely volatile. And if you can get in and out really quickly, you can make a living really easily. So let's go through all of the steps one by one. So step number one, let's go through it really quickly. So the first thing you need to do is you need to find volatile gappers. And it's very simple. People always ask me, how do I look for gappers? What's a scanner? It's really simple. The first thing you need to do is you need to go to a stock screener. There's so many stock screeners. The one I use personally is TradingView. Over here, you can see it says stock screener over here. If you want to use another one, you want to use, let's say, Finviz. You can use whatever the hell you want. It doesn't really matter. Just use a stock screener. Once you're in the stock screener, you want to find the gappers, and you want to find a gapper with a minimum of 20% gap, right? So if I open my stock screener over here, you can see over here it says gap percentage. I want to find a stock that is gapping at least 20%. If it's gapping less than 20%, I don't even look at it. I don't care what news it has or why it's going up. I don't care. If a stock is gapping up less than 20, I don't look at it. All the stocks that are gapping above more than 20, that's the ones that I'm looking at. Those are the ones that I'm focusing on. So that's the thing that you need. And the last thing to see is the ones with small market cap and small float. Because small float, small market cap, it means more volatility. More volatility means more money. So how do we find that, right? Well, first thing you really want to focus on is the gappers. So once you find all the ones with 20%, you then want to look at the market cap. It's very simple, right? It's very simple. You just go over here, you can see the market capitalization over here. Open this, you can see the shares float. This is a very small stock. It's 9 million shares, 9 million market cap and 3.4 million shares float. That's very small. That's what we want to see. If you have a stock that's market cap is like $15 trillion, you're never going to make any money because that stock is going to move maybe 1 or 2% in a day, max. If you have a stock with a market cap of, let's say, $10 million or $5 million, that stock is going to move up like 50%, 100% in a day. Those are the stocks that make the moves, not the ones that are a billion market cap. Same thing with float. You need to find small float stocks. This has 3 million, that's tiny. You never want to find the stocks that have a billion shares float, 10 billion shares float. It's never going to make a difference. So find small float and small market cap. Gappers that are gapping above 20%. That's step number one. Step number two is to enter. Once you've found the the gappers that are gapping above 20%, you want to identify the one that you want. It's very easy. You look at all of them, you look at the pre-market chart, you figure out the one that you want. It's very simple. Once you find the one that you want to enter. Now there's a couple of things you need to keep in mind when you enter. The first thing is you need to wait for support. I see people entering as soon as the market opens. That's the biggest mistake you can ever make. Because in all honesty, you don't really know what's going to happen to the stock. The stock might open, instantly goes down. But because you bought when the market opened, now you're down like 50%. So don't buy when the market opens. You're not helping anybody. You're not getting in early. It's not a competition. Do not buy when the market opens. You need to buy when there is support. You need to wait for support. And you need to enter only when the stock confirms support. If a stock opens up directly from the get-go and it just starts booming upwards, I'm not going to buy it. I'm not going to buy it. I'm going to skip it. I'm not going to trade that day. That's just how I trade, because I'd rather trade a trade that I know is going to go my way than one that's kind of like, 20%, 30% chance. So what do I mean by support? So let's look at the chart over here. This is the stock that I ended up trading, Onco, you can see over here. And this is where I entered and this is where I exited. Now, if you look at the pre-market chart, there's one area where we can clearly tell that there's support. You can see the stock started gapping up over here and it found some resistance around this level. So it kept going up, found some resistance, and it went up again. This position right over here, if you look at the price on the right, this is like what, like 64-ish cents, like 63, 65-ish cents. That in my brain is the support area, the possible support area. So the next thing I'm gonna do is, I'm gonna wait for this to open. If it respects that support level, the same level over here, if it respects it, then I'm gonna go for an entry. And only if it respects it. If this goes down and up and up and down, and it just goes down here, I'm not interested. If it goes down, and as soon as it touches this level, it goes back up, I'm interested. And you also need to see volume coming in. You need to see volume coming in. If this has tiny volume, barely any volume, you do not want to trade it. That's exactly what I saw, and that's how I entered. Let's move on to step 3. Step 3 is to take profit. Now, there's a couple of reasons why you should sell, but the main reason is you should sell when you see weakness. That's the most important thing, weakness. Don't just sell whenever you feel like it. Don't sell because, I don't know. No, you need to sell for a specific reason, and it's specifically when you see weakness. So there's 3 main reasons. The first thing is VWAP resistance. So let's assume, right, the stock opened, it kept going up and up and up and up, and as soon as it hit VWAP, it just went down. It tried going up again, hit VWAP, it went down. That means that there's a crap ton of VWAP resistance. I might just sell then, right? Because I can see that it's finding resistance on VWAP, I immediately just sell. That's the first point where I might sell. The second point where I might sell is the pre-market high. You can see over here, this is the high of the pre-market. So if the stock ended up going all the way up till here, I might sell. That's the second reason. And the third reason you can see is half dollar, whole dollar support. Pretty much, it's when a stock like this, let's say this stock opened at what, like 70 cents, right? The next major level of resistance is going to be $1, right? So you can see the stock goes up, boom, boom, boom. It hits $1 and it goes back down. It tries hitting $1 again, it goes back down. Why is it finding resistance at $1? It's just psychological. There's nothing to it. There's nothing magical about number 1. It's just psychological, right? So it found resistance at $1 and then it went back down. And as it was going down, I was like, yep, I'm out to this 100%. That's when I sold, made about 44%. That's how you make exits. You don't make exits because, I don't know, it might go down. You need to have a plan. You need to have a plan. And similarly, if you're losing money, you need to also have a plan. If the stock is going down, you don't just sell because, I don't know, I'm losing money. You need to have like a plan in mind. Okay, if it goes down 6%, I'm gonna sell. If it goes down 8%, I'm gonna sell. If it goes down, 3% and it's really slow, I'm gonna sell. Whatever your brain comes up with, figure it out, but keep your losses very small. Step number 4 is to rinse and repeat. Do this every single day. Try and do this every single day. Don't try and be, today looks good. You have to be consistent with this. Every single day, try it. You need to repeat this every single day. Be consistent. And again, if you're nervous, if you don't really know, you're not too sure, then practice with a paper account, like a paper trading account, those fake accounts where you can just trade with fake money. Trade with those accounts for a little bit until you gain confidence. Once you gain confidence, then step in. Don't just fund your account, never trade the strategy, and then day number 1 you put 10 grand in. That makes no sense. Like, if you're nervous, if you've never traded the strategy ever before, trade with a paper account. Gain confidence. Once you're confident, then step in with real money. That's how it should be done. And analyze every single trade you make. Literally every single trade I make. If it's a win, it's a loss, it's a break-even trade, I don't trade, whatever. I analyze it. Like, I literally make a video and I'm like, okay, this is why I entered, this is why I exited, this is what happened, this is what I saw. Next time I can do this better, next time I can do this better. You need to analyze every single trade you make. Never miss out on that, right? Have a journal, record the videos like I do. Do whatever you need to do, but you need to analyze it because that's how you get better. You don't get better by just repeating stuff. You get better by repeating stuff and analyzing where you could do better next time. That's how you get better at things. And now I'll show you some proof that this works for me and works for some other people. So as you guys know, we have the thedrakoroom. This is my personal community. You can see all the people that are making money from this community. It's crazy. Today, this guy made Nick, he made $261. Luke made $216. Pawnee made $114. Taz made $405. Taz made $2,870. You can see people are winning like almost every single day. Someone is making money. It's crazy. Inside the community, we also have the watch list channel. This channel is where I explain everything. I do all the work for you. So when you see the gappers in the beginning, you don't have to figure out which ones to trade because I literally tell you which ones I'm going to be looking at. Every single day I tell you, okay, this stock I'm going to be looking at, this is a support level, this is why I think it's interesting, this is another stock, this is a support level, this is a support level, blah, blah. Every single day I'm telling you the exact stocks that I'm watching. I make it super easy for you. When you join the community, you also get access to every single one of my trade reviews. So earlier when I was talking about analyzing every trade, like this is it. I make a video in every single trade that I make a video. This is what I did, this is what I didn't do, I could have done this better, etc. This is extremely valuable insights, and I explain the stock I traded, when I entered, why I entered, when I exited. I explain everything in all of these trade reviews. They're extremely, extremely valuable. So if you guys do want to join the community, email me right now on this email right over here, because I am going to be closing the group soon to just focus on the members like inside the group. So if you do want to get in, quickly email me and I'll try and get you a spot inside. If you guys want to watch a video where I explain the one indicator setup that will make you rich, super simple, click the video that just popped up. It goes through the strategy, it goes through it in a bit more depth. It's a very good video. Check it out. And of course, subscribe, like, comment, share with everybody, all that good stuff. Thank you guys for watching. Appreciate it. Peace.